Okay, coming right up. And hello, it's 8 o'clock on Friday, the 8th of September. Welcome all. Another hour with me. Thank you very much for joining. I will get straight to the disclaimers. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, we are live. Just going to pop up in Discord, which I had to get rid of. Okay, we've got the markets here, and you can see that ES has just had NQ has just had a spring of the overnight low, and ES has bounced in a supply-demand area, more like in category A. Okay, let us move along to what are we going to do today for our hour. Okay, we're going to continue or persevere with the new format, and that involves setting this up with 4 quarters, education ideas, good ETH setups, especially where we were wrong, prep context for today, and live order flow analysis commentary. Okay, let us go back to the display. Okay, there's a couple of things I really want to actually provide some background education with TradingView's help today. It doesn't have to be TradingView, it's just I've got it as one of the applications, and I've always got this in the stream. So there are a couple of things. Firstly, since we are now in true rollover mode, in other words, we are rolling the futures contract from September to December. I will just state what I personally do. Okay, I do not switch contracts. You can see this here, ESU 2023. I do not tend to switch contracts until the volume is larger with the new contract than it is with the existing contract. So how do I monitor that on a real-time basis? So if I go into, this is just a list I've got on my phone at the moment. If I go into this little watch list, you can see that I have 2 ES symbols and 2 NQ symbols. So what I'm doing is I'm just monitoring the volume between the September contract and the December contract. The default one in TradingView immediately becomes December, so that happened this morning my time, which is Friday morning my time, so it's been like that for over 12 hours. And NQ is September and December, but you can see that we've got more than twice the volume, maybe in NQ's case, nearly 5 times or over 4 times the volume in the September contract than the December contract. So I stick with the September one, and I'm likely to stick with it at least until Monday, but I will when I start up my Bookmap and my charts on Monday, or which is Sunday night New York time, have a look to see what the volume is tracking early in Asia. So I just wanted to show one basic tool that I do. And since this really is education and ideas, and this falls within that category, we can talk a bit more generally about rollover and what to expect in there. I mean, if we look at the TradingView charts here, you probably don't get quite as good. Here we go. This is the whole of the ETH session. I've just zoomed out. You probably not. It's probably not quite as apparent as it would be in real time, but the market is a lot thinner. The moves can go further than expected, and generally I would say it is a little bit trickier in terms of setups, both in terms of finding your setups and executing and managing those setups should you take trades, than it can be on non-rollover days. And this can persist probably until Tuesday next week. So it's just one of the things that you just have to be aware of. I mean, if you are a futures indices trader, this comes up every 3 months, obviously. If you're trading oil, crude oil, then it can be every month. So it's just something to be aware of, and some of what we're going to look at in terms of the action from ETH overnight is a little bit atypical. Still some good action to look at, but it's not necessarily something that we're going to see um, after Tuesday next week. Okay, so that's just one idea. Rollover, in other words, in summary, tricky, be careful, and watch the volume to see which is the contract being traded most heavily. Yeah, I could put up I mean, maybe I should actually, while we're here, maybe we should put up the December contract, and we'll subscribe to that one as well, just so that we can actually look at the liquidity in that a little bit later. Get rid of that trading thing because I'm not trading there. But you can see within ES in December, excuse the settings. I've got to actually try and inherit them. Maybe I'll do that after this session from the September contract. This is not how I typically set up my bookmap, which is more akin to that screen over here. This is how I set it up with the columns that we discussed, and we're currently testing out market pulse, volume pressure imbalance. Anyway, the only thing really to note here is the thinness of the product ESZ23 and the fact that there is no real help in terms of resting liquidity, etc. In fact, there's absolutely none from this particular screen, regardless of the fact that I just launched that screen. And you'll find that's the case. It's just algo boundaries. So the liquidity is just really the algos monitoring or marking each side of the market. And I wouldn't say it's a tremendous amount of help, which is another good reason why I would be sticking with September today. But again, it is your personal choice and your trading business. But I mean, you can just see if one zooms out in ES, how useful that some of that liquidity might have been, like this heavy liquidity band at the top up at 4470, marking the current extremes of the overnight high. Okay, right, there's another subject. Again, I'm going to use TradingView, but you could use FinViz, you could use anything that you want for this purpose, but since it's free in TradingView, I am going to pull it up. Okay, so we will just blow it up here just for this purpose. So it's something that I did a screenshot of in my Discord channel. And by the way, I keep forgetting, please ask any questions that you want. I will yep, sure, Tom. I'll do that when we get to that part of the Tom's asking about uh, how I'd read order flow and use it in NQ and ES. Yep, sure. I will do that as we get there. But I just want to show this because what's interesting is that this is actually performance day. No, it's changed, unfortunately. I should have done a screenshot of how bad this was when we opened up at the market. I think this takes into account the pre-market, and Apple's basically down 3%. So this is sized according to market cap size. So when you have the market leader, and if we put some context about the big rally that took place and this multi-month uptrend that we have been in, that big rally has been fueled by the big techs. And if you look on the sizing on this screen, you can see what those big techs are: Microsoft, Google, Apple, Nvidia, Amazon. We don't need to go any further than that. So when one of those, in fact, the sort of the biggest, well, there's a question mark now whether it is the biggest. I won't go into that. I won't go and delve into that because we don't have time. But when one of those has a big down day and it is related to a theme, and let me just get rid of this now, and we'll go back to having ES visible with on the side, and we'll go back to the screen. When one of those is down, then you know that is going to have a significant impact on the macro theme in play in the market. So, I mean, we all know now that in hindsight why it moved so massively, Apple. I think it was down at 5% at one stage in ETH yesterday, simply because the Chinese government has banned the use of iPhones at federal and local government level, I believe now, and the market is pricing in an impact to Apple's bottom line from that. But if one of those big 4 or 5 techs is suddenly going to veer downwards, that is going to affect things. And one of the impacts in terms of ETH trading is that some of our shorts are going to work really, really well, maybe better than they would have worked a few days ago or when we were in that long uptrend scenario. So that's one thing I would draw your attention to. Just a heat map looking under the hood to see what might be driving the overall sentiment in the futures indices or the stock indices. The other thing we can use, and I'll bring up the slides from this. The other thing we can use as well is that we can delve into, I mean, in this case, Apple. This is a screenshot from earlier, so this is about 3, 4, 5 hours ago. What you can do, using again free information that is out there, is look at options levels that may come into play today. I mean, this day, September the 8th, is a big option expiry day. I've used the wrong word here in this screenshot. I said potential option boundaries for today. I should not have used the word boundaries. I just mean magnets, potential options magnets for today. So the two, whether they're based on open interest, gamma, or whatever you want to look at from an options perspective, the two there are 177.5 and 180. And having a small chart of Apple open, during the day, we'll go back to our our screens so we can keep watching ES. Just having an Apple chart and being aware of those price zones. I mean, again, you could do this equally in other scenarios with the indices themselves, the SPY, SPX, QQQ, NDX, all those kind of indices. But when you've got such a large sentiment shift in a major dominant player in especially the Nasdaq as well as the ES, it's worth looking at, in my personal opinion, again, some of those options levels that could come into play. And so far, I mean, let's drag in. Let me just drag in if I can. Let me just drag in an Apple chart from today. So that 1775 level, 177.50 is yesterday's settlement. 180 is up there. It looks like they had some kind of thin wick and just bombing up there. But it's one of those things. I mean, you may ask the question, why, if I love Bookmap and I use Bookmap all the time, am I using other products like Sierra and TradingView as well? Again, I think both those products are a cost-effective value proposition which complements the order flow analysis that I look at in Bookmap. So you can add I mean, I've got the lowest package in TradingView and I've got a fairly modest package in Sierra, but the price that I, for example, pay for those two products added together is nothing compared to some of those premium charting packages out there with all their bundles and add-ons, etc. So that's why I do it. It's to give me other information, and in TradingView's case, to give me a balanced view of lots and lots of symbols in the market. Okay, that was just my bit of ideas and education for today. So we can now move back onto the slides and let's have a look at the next. Yeah, the next one is ETH setups. Okay, all right. So the first one I did a screenshot in the room. So if I go forward to the screenshots, I did these two screenshots in the room, and this was fairly early in the Asian session, probably just after the China Open at 9:30 p.m. Eastern time. And I'll drag the TPOs across, and we can have a look at them. But we had to where are they? Trying to see which one is which. That looks like NQ. Yep, that's NQ. And we had ES. At that time, which was exactly the same time, I took the screenshots together, we had a very, very poor high. What does that mean? It's probably better to look at it on this one because I zoomed in more on this one. it means that you have a significant amount of volume, i.e. high liquidity, high transactions. Well, I wouldn't say high liquidity, but a high number of transactions occurring at the high of the session. So it's clear that they wish to transact at this business. There was no tapering of the profile, so it suggested that this was unfinished. So in the same way that I look at large unfinished auctions in my order flow when I've been talking about ES and NQ, this was a red flag to me that there was a very high probability that this would be taken out and they would push it quite a bit higher. I mean, if we're doing a simple one by one expansion, I mean, from about here and then doubling that. So basically another one of these halves of a profile at the top to create value. So it would have been up towards that liquidity that's there. And if we look at what happened um, at the German pre-open, it stormed higher and took out those levels. So if that poor high was around about there and there in ES and there in NQ, it stormed higher. And if I drag down the, let's pull down the NQ profile, drag it, yeah, and we will just go across to it. Okay, here it is here. So if we look at the actual 30-minute bars, and you can see that poor high as it developed, and it came back and then smashed right through it, and you got a really nice tapering of that profile up above. And that's just an example of what can happen or what is likely to happen when you have such a poor high. They're quite often not as poor as that. When I say that, I mean not as obvious that there is such a high level of volume there. Just reset that one. Quite often, you know, it's not that fat, but that one was very, very, very fat. It was almost the VPOC of the day at that time, volume point of control. So that's just an example. Anyway, I would have said that was the best trade for the entire ETH session, although there have been some pretty remarkable moves in terms of up and down and back and forth. But if we go and we move on to, I'm just going to have to zoom right out so we can get back into the, I think, you know, if one of the things we do look at is that action. It's a little bit tricky to drag out. Okay. Let me just drag this across. Okay, I mean, here we've got ES September. And maybe if I just drag it a little bit more. It's probably not as obvious as it was in that profile chart that I just did. You had a very, very high, very, very poor high. And what actually happened here, and this is, I mean, we had a couple of goes at it. So if it was a poor high back around here, which was 8:18 or 20 past 8, just after the Japanese Open, and then the first thing they did was to trap all the late longs and push it as far south as they could push it. So the first way in which you could have attacked that would have been a supply demand or a spring in this scenario here, right here at the Chinese pre-open. The Chinese pre-open is 9:15 a.m. Not sorry, 9:15 a.m. my time, 9:15 p.m. New York time or Eastern time. So you have a low here. It comes out, tags it. You've actually got quite a low amount of volume at the low 30. So that's reasonable to suggest that a low might be in. And then they come right back to this zone here, which is where this poor high or fat high was. I can't remember whether they took it out by one tick or not. But what was interesting was that this iceberg came in. You can see it at 182. On this occasion, that iceberg was serious. Sometimes you'll see them playing games and it looks like a sell iceberg. It'll only go down a little bit and then it'll go straight through it. This one did actually push it all the way down. So again, you know, if you'd seen that one, if you'd believed in it and you'd seen this kind of liquidity, sorry, there's something missing, isn't there? Happens every time, every day. I'll just put the outside liquidity back on. that would have been an interesting trade, which was effectively an upthrust where it took this one out by one tick and then it went all the way back down. You know, that trade there would have been quite beautiful. And now if we zoom right in and we have a look at this volume pressure imbalance that we've been watching for the last couple of sessions, yeah, you could see the delta. You can see it both here on the actual dots. You can see it here on the volume bars, and you can see the extremes of that delta on the VPI, the volume pressure imbalance. I mean, you know, it would have been a brave person to take that short there. You would have got a few points. I mean, if you'd managed to get in there. I'm just going to examine the microstructure per Tom's request in a second, but I'm just seeing what you might have got out of it in hindsight. Maybe you'd have got it in at 57.50, and yeah, maybe you'd have got 3 points out of that one. But it wasn't something that I would or did look at. I was looking long at this stage because that high was so poor. So what do I see here when I zoom right in on the microstructure here? So what I see is that we're at this poor high. If I did zoom all the way back out, we'd see plenty of delta buy delta potentially trapped at the high, and I'd see a potential scalp. You can see a few buys at this little high here at 4458.25, and you can see them bouncing micro congestion, and you know. Maybe you'd have found a breakout trade there. It's very hard. I can't see a trigger for the way that I trade there. I mean, you can on a higher level see this as an upthrust trade where it or a double top where it takes out one tick higher and then goes down. But for me, just there are two ways of looking at it. There's the micro congestion right in that little zone there, and there's a broader congestion in a slightly larger area. If you were going to scalp that short, you'd be looking to take it from one side of that larger congestion area to the other. But just for me personally, it was too risky a trade because of where the likelihood was that we were going to take that very poor high out on both, and also the likelihood because the market is thinner with this rollover that we could move quite far. So in other words, if you did not have tight risk management, which is critical and something that we keep saying time and again, you could be in an awful lot of trouble once that poor high was taken out. Right, this is the kind of trade that I would have taken. Okay, we have a seller iceberg here. It does not really worry me at this stage of ETH, and again we are talking about what are we talking about? About midnight New York time, midnight 30. You've got a sell iceberg. It's a resting sell iceberg, and what that means is that they are staying in the market. So that becomes for me a target, right? And we have a little congestion area here. So we get into this little zone here and they congest. You can see them, they push down here to this price here, which is 4454.50. And by the way, we've also got this VPI, which we'll keep noticing, of little trigger points where there may be a few sellers trapped, and you've also got the dots again. So you've got this little congestion zone here, right? You know you've got this target, which is your first target, which is not that hard to hit. So yeah, and you've got plenty of opportunities, even if you get in, not at the low, but sort of more at this level, which is 454.75 or 455, and you take one of these sell traps, so you take any little push down on the basis that you want to trade back to the other side of the larger congestion area, and you want to have this as your first scale target, which is 456.75. If this was NQ, I would always have my target a little bit before the sell iceberg, but with ES, it's still quite likely that you'll at least get to that and get filled with your target limit sell order there for your scale. So you'd have that. Where would your risk point be? For me, there's no great liquidity help. I mean, this movement here is just algos marking the boundaries or the territory, as I said earlier. So I would be taking a very, very tight stop. So I would basically have my stop either. I'm just looking at this the sell dot here, volume of 18 at 454.25. I probably have my stop at 2 ticks below that. Again, I'm saying probably because again in this session I was trading NQ rather than ES, but I know that this is actually in hindsight the better or more reliable trade just because of the structure. So I'd have had a stop 2 ticks shy of that, so about 453.75 and targeting the 456.75. So anywhere that you could have got in, I mean, maybe you had a magic entry there. More likely you had an entry there. So you had a 1 point stop to a 2 point target, which was a very high probability target. So you had something worth taking. You were saying your first scale was effectively 2R, and no, on this occasion I would not scale at 1R. Ordinarily, if I was trading NQ, yes, I always scale at 1R, but here, no. It is just something that has such a high probability. It's something that I would be interested in holding. Okay. And I'm also aware that if it does get going because of the shape of that profile that I showed on that TPO earlier, it could, if the, where's the pen? Let us draw again. So if that profile was like that, then what I was saying with the double was that it's likely to go like that. So I'm saying that if you have your first scale there, then you've got a good chance of getting a second scale up here, right? So that could be a second scale in the 4R region. So it's just something that that is the reason why I would not have scaled at 1R on that trade had I been in it. But again, I was not in it. I was not so fortunate, and that's just the rub of the green, trading the wrong instrument. Okay. And we can see, they got on a good run. And they went on a great run. And in fact, if we look at the resting liquidity that was in place there, and again, this is something we talked about a few minutes ago, that resting liquidity that's still there at 4470, you'd know that you'd want to scale out well before that because you've had a very, very good result here. You've had probably 4R on your trade, so you do not want to get greedy. And you can always trail your stop behind that, targeting as close as you can to that resting liquidity where after a good move like that and a tapering of the profile, it's likely that they will have some form of reversal. I'm just going to stop and read the question. How does the order flow help with the read? Okay, right. Again, Tom, it partly depends on what you're defining to be the order flow. Some of what I define to be order flow is some of the stuff that appears in these 2 columns or 3 columns, depending on which way I'd set it up. So I'm reading on each of these micro congestions. I'm zooming in and out and reading what is actually hitting the book. It's a bit like using a DOM in the old school, which I'd rather not do, and just reading what's there. Basically after we'd gone in there, and we can see only 2 hitting the book, and that to me is what we call a rollover in ES, sort of the absolute opposite of an unfinished auction. In other words, there was very, very little sell interest as we had this little area of micro congestion. That part there is telling me that nobody really wants to hit the bid and push it down any further, and that if I am going to be aggressive because I've got a target up there, it's worth taking. That's the kind of order flow I'm looking at. I'm also looking at things like pulling and stacking, which when that market pulse API is released, I'll try and build something in Bookmap that has some form of market pulse like histogram oscillator thingamajig in here. But at the moment that API is not out there, so I can't do that. So what I've done, I program my things in Sierra so I can see views like that, and that helps me. Having a look at where any sellers were hitting, were any sellers trapped, these little rollovers, that's the only kind of order flow I got from that, even now when I go back in hindsight. I mean, we can have a look at the NQ again, which is a different beast and has what I'd call arguably better order flow and better profiling in the ETH session, not the RTH session. The RTH session, I think the ES certainly in this level of volatility wins by an absolute mile. But yeah, I mean, we've got a few minutes, so why not go back and have a look at the same kind of action in Asia targeting that high. So just bear with me while I drag this back in, and you can see you have to zoom in a huge amount vertically. That's the Canadian economic releases that are out there now. I haven't actually touched the economic calendar yet, but I will bring it up a little bit later. But essentially, there's nothing until 9 a.m., which is the end of my webinar, at which stage there is a small news release and a Fed speaker. Okay, so you've got an iceberg. Can't really tell how big that was there. 21 maybe, 21, which is a reasonable size in NQ. Okay, what have we got by way of order flow? Okay, what helps here? In terms of order flow and resting liquidity, etc., the fact that you've got this band at 52, is it 52? Yeah, 15,252, that helps as supporting. The fact that they add to that liquidity, that again acts as support. The fact that you've got this sell iceberg, resting sell iceberg there as a target helps with longs. You've got a nice little structure here that they reach a low point. They cannot auction any further down. You've got support. That is good for me. I mean, you've also got this VPI, a push of delta, which you can see with these volume bars being quite pink or magenta. They're pushing quite hard, but they cannot get down further than this buy iceberg, which stays in place. But more importantly, that resting liquidity. Also in microstructure, that is, it's the same thing that we were seeing in ES. It's a small zone. They can't go any further. We can see as well that there is a good trap. This is one thing that I do use regularly, and I've been talking about this as part of my order flow in NQ, where you have a profile in the delta profile in this column here, just delta, and I'll show you exactly how I configure that column so that people do see what I mean. This column is delta, so I'm showing bid and ask, so it's all added together. I'm showing bars only because I can't be bothered with numbers because they do not add anything to the numbers I can see in the volume profile, and that's all that is, right? When I see this got a nice bunch of sellers all the way down, and we're talking about several price levels down. 1, 2, 3, probably about 3 points down, is all just trapped sellers. That to me is something that is order flow. So you've got microstructure, you've got a clear target above, you've got effectively zoom right in. You can't really see because of the way the dots are, but there was some buying here. I mean, you can see it in there. I'd be looking as well on some of the other stuff that I have at the type of buying because that can often help me. But from this chart, it's the resting liquidity, it's the buy icebergs, the trap sellers, and the fact that the microstructure suggested we were at the bottom of a micro congestion range, i.e. a trading range, and that we were likely to break out up towards the target, which was much higher. I got a question from Badril. Do I trade gold? Not at the moment. I did used to trade gold. It is a market that is quite active in Asia. I do have a chart up at all times, which shows me, I've got two charts above and below each other. One shows me gold, one shows me an equal weighted dollar index. So yes, I am monitoring gold in ETH, but no, I choose not to trade it. But if you were to trade it, I suggest that you do look at springs and upthrusts. Because they have a lot of those in gold. So that's the category C type of supply demand setup that I mentioned previously. And that's the, I would say, the best type of setup for gold in Asia. Okay, we have moved past the half hour, so we're now going to start talking about prep for today. So having a look, yeah, we're just about to tag settlement again. In ES, it's just about to get settlement. NQ is not far off it. They're both just crossed Globex VWAP, and that looks like a run up to settlement at this moment. Okay, so let's move on to the images and let's start talking about where we are in terms of context and what is likely to happen today, or what may happen today. Okay, Where are we? Okay, the first thing that I normally cover is the economic calendar. So as I mentioned, there's one thing missing on this TradingView economic calendar, which they haven't put in yet, and which they should, which is Fed speakers. There is one at 9 a.m. and that Fed speaker is Barr. Fed's Barr speaks at 9 a.m. Eastern. Then you've got used car prices month on month. It's seen as a low priority item. And yeah, you've only got the US wholesale inventories at 10, which is the only thing that's cropping up both on my financial juice feed and the TradingView feed. And meanwhile, ES is having a
NQ by 50 to stop.
it's having a really good run. So maybe we should just switch over and watch this for a second. Yeah, NQ is having an absolute bonzer of a run. So it's just driven straight up and tagged settlement and had a really big trade at settlement. It's over 60. So this is showing a clustered volume of 330. And I'm seeing interest at this. So we're not in congestion. This is the absolute opposite of congestion. We're exploring up. It looks like they have not finished exploring up, and we are likely to go a little bit higher. But that may also be the great setup, which is the upthrust or the reverse spring. So it's just interesting to see what is hitting the peaks at this point and whether we can stay under this particular cluster of volume, this 300, or we're going to go up. No, we're still exploring higher. Just seeing if there's any news release or anything like that. No, it's just, this is typical of rollover action where it is thin, it is volatile, it can be quite dangerous if you do not have your risk management under control. So if we zoom out and just so we can see quite clearly the difference between that micro congestion where we can see in Bookmap and this, which is basically diagonally straight up, and in ES gave us a better read there. So you have a large buy iceberg. Large in the sense we're right in the middle of rollover. It's 270. We're in the ETH breakfast session. That is significant. So they put skin in the game and then they bought up straight to settlement. And if we zoom right in on this just to see, yeah, you can see this trap here as well. You've got 436 sellers. That to me is good enough order flow if I've got targets above and I'm willing to take a tight stop loss. You've also got this volume pressure imbalance showing that the delta has been hit quite hard to the south side. In other words, trap sellers. It's represented in these columns over there, the delta and the volume of sellers. And this gives us a nice squeeze upwards with a clear target being settlement, which they have now taken out and continued exploring higher. Okay, what's also interesting, and again I'll point this out, is that resting buy iceberg is still there. I do not use that buy iceberg in the same way that I use a sell resting iceberg as a target. Maybe it is because markets generally tend to go up overall, and it's something that has not worked out in terms of my probability analysis and looking back at lots of these buy icebergs being resting targets. Yeah, often, yeah, they do come back and tag them, but often they will not come back and tag them. It is not the same level of probability from my research, but please feel free to do your own. Okay, the only thing I will say is that because this market is so volatile, it would not surprise me if we didn't just have something that dragged us straight back down to at least tag that, because you've got such a big delta wedge in the delta profile, the red in this profile here, that it is likely that we will get a tag somewhere near it. In other words, markets love to come back and retest areas in which large transactional volume was conducted on the likelihood that they will encounter liquidity there again. You know, that's the logic behind it. All right, somebody just saying good morning. Yep, good morning to you too. Okay, right, we are back on the images, so we're just looking at preparation for this session. Okay, the dailies. Let's have a look at the dailies. Let's remind ourselves that, despite this thinness and this volatility today, we are still in this multi-month uptrend in ES, and it has to go down quite a way to break that. Maybe it will, but it is not there yet. And NQ, the reversal obviously with Apple's performance yesterday is stronger than in ES. So in fact, if we went back one slide, you can see that there, this bar here compared to this bar here. The NQ is weaker yesterday. I think it was propped up by YM. ES was propped up by YM. So that is the scenario we're in. It looks like we're on a short-term downtrend. Maybe we'll track all the way back to and break this trend properly, but we also have to respect that overall we're in a multi-month uptrend. Okay, that's it with the slides for today. Okay, now let's have a quick watch of what's going on. I'm just having a look at the both of them to see what's really worth talking about. And bearing in mind that the liquidity or the resting liquidity really, it's not anything that you'd put a lot of weight on today. I know you've got a value here which is not at a round number, which is 15301. And if I zoom right into that, I can see that 48 is the correct number of orders there in that. So, ordinarily that might be considered resting liquidity in the fact that it's been there off and on since no, it's not a long time at all. That's 8:23, so that's not, it's less than an hour. So there is no resting liquidity that you would really put any weight behind. Yeah, let's have a look at the microstructure and see what's happened here. So you've had some decent sized trades into relative liquidity, and by relative liquidity I mean it's not black, it's shaded, showing that there was a decent bit of liquidity there because I've got my settings scaled right back. That in order flow terms is always a good potential trigger point. So when you've got decent transactions after a decent swing, and this one, as we saw, was a big swing up into liquidity, and the transaction size here 42, 47. Yeah, so we're talking about 100 trades to round this off, and you're looking for a short, and your first target is going to be back at settlement, which is 82, and it's already gone through it. That is the kind of order flow that you want. Sorry, they moved on me. Okay, in terms of structure, it is a reverse spring or upthrust, so it is the type C category trade. So you've got a high, almost a double high here, swing straight back, straight through it. You can see it's quite thin on the way right to the top. By that I mean it does not trade at these prices. Where there is a gap, there has been no trade. It just moves straight to the next price, which means they've basically swept the book higher. Order flow terms, when the NQ and ETH does sweep the book with, it does not transact at certain price levels up into liquidity, that is a good order flow trigger. Okay. In terms of where it is in the overall scheme of things as well. So if we move across to the right hand trading view chart, you can see that this is also it's on the Bookmap chart. It's a micro upthrust, a micro breakout failure, category C on that one. On the larger 3-minute chart, which has been scrunched together, you can see it's also a breakout failure above this high 15287, which was formed at 445. So that's a significant swing high. So in terms of, you've got a good trigger, you've got a good location both on the very short term charts and on the slightly longer term charts. You've got the fact that we've got high volatility, so we're going to get swings up and down in both directions. And what that means in terms of your reward, your risk should be the same, but your reward may be greater. You might have slightly wider stops because of the level of volatility that has been experienced today. And in terms of ranges, then they haven't been enormous. I'm looking at the ETH range for NQ. It's 121 points over the average over the last 10 trading days, 128. So we're right on the average range already having been achieved. So that's one thing to bear in mind, that um, the range is essentially from there down to there, and it is likely that we will not exceed this in ETH because the range has been done already. Again, there are no givens, there are no assumptions taken, but it's just a probability that that range for the ETH session, the extremes of the range have been put in place already. Okay, so that trigger took us down from 90 to 79. You'd only got 10 points, but again, 10 points depending on the risk that you took, and that is the most important part when we talk about these order flow setups. Here you've got this crash into liquidity, or decent trade size into liquidity of that 100 plus in 2 trades. I would put my stop as tight as possible. How you actually do this in practice is up to you. Okay, I've mentioned that I have something that I built myself, which gives me a way of having an equal dollar value risk on every trade. But in practice, what does it mean here? I might have just had a fixed stop of it. My tool uses either a fixed or an automated volatility-based stop, as I've said previously. But because this is so tight and because it happened so quickly, I might have just left my fixed stop at 8 points and sized it on that basis. Um, and then what would I do? Here I would have moved that stop pretty darn quickly after this move away. So I would have so my default stop on this scenario may have been up at 98, 99, but I would have moved my stop almost straight away down to 91.25. And then, if it had taken that out, I'd accept that. You would have been less than my R dollar value risk, because my R dollar value risk would have been priced on 8 points. But still, uh, it is what it is. You have to act as quickly as you can. You have to build tools or use tools that let you execute dollar risk managed trades, but you also have to accept how fast the market, especially NQ, can be. Okay, just have a look coming into the session again. ES. By the way, if anybody's wondering, just trying to get this one. It's not doing it. It's trying to inherit the settings. It's not. It doesn't always do that for me. Aha. No, it's still not doing it for me. I was trying to inherit the settings from the September contract, but I'll do it later. Depending on where you right-click, you should get the menu saying inherit settings from the other chart, but it is not doing it for me. Nope. Okay, there's nothing to be gained really from looking at that December contract, so let's not waste our time looking at it. So what can we see on this chart as we talk about live market analysis and what is available to be seen? So we're in the context of today, we're in the middle of today's range. We're at settlement. What does settlement mean in terms of the market coming into the open, which is only 30, 40 minutes away? It means that nothing has changed overnight from yesterday. Will this be a trending session? Unlikely at this stage, but anything can happen, especially with Fed speakers afoot. If there has not been a significant market-making piece of news, whether it's an economic release of Fed speaker, a China announcement about iPhones, and the market has not significantly moved as a result of that coming into the RTH open, i.e. we're still roughly around settlement and we're within yesterday's range, that does not really give you a big probability of a trending session. I still think there will be plenty of trades around, but we may have more mean reversion. And if I look across at the Apple chart now, and I bring that back down again. So remember, I was talking about two magnets here being the 17750 and the 180, we're still within those two magnets, so both of those can be tagged, and they can make their options winners at both of those. We have some interesting action now that we're beginning to show some progress towards this resting buy iceberg. They know that they're likely to transact at this. We've got a micro congestion area here. We're at the extreme. So the micro congestion area, it started off, after they were unable to explore any higher. And we can zoom right into that and have a look at it. Even though there is actually an unfinished auction. Let me just check. Yes, there's an unfinished auction of about 100 at the high. So it's likely this will eventually get taken out. But this little micro congestion zone had been broken to the downside. They came back and retested that zone. That would have been a potentially interesting trade setup if you had the order flow to target this buy iceberg of 270 down at 4453. So that's a micro congestion zone, a breakdown, and a test back up. The volume pressure imbalance would not have helped us on this one. So what would have helped us? What are the factors that you might have used? You might have used the fact that they kept adding to liquidity. If you notice that this kept darkening and darkened again there, you could have had that factor potentially as resistance, so a stop there. So if you're entering into a transaction here, you're in about 45850, and you'd have had to have a stop, or likely position of a stop, up for about 2 points up there, and you'd be targeting 45850, 45350. So you'd have a 5-point target against a 2-point stop. So you've got a 2.5 R potential there. But I think you'd probably need a scale. So I'm saying that if you got in, you probably need to take one scale well before that, because I don't think the likelihood that it will go straight down is that high. I expect some choppy games, especially as we're moving in towards the 9:30 and we've got a Fed speak coming up. I'll just stop and take any more questions at this point in time. Any more feedback on the structure of dividing this into 4 quarters as well? In terms of the order flow as well on this micro congestion area here on this test back, what do we have? We had some tiny stop iceberg stops, MBO stops here. So we had 6 there and 1 there, but then next to nothing. There's nothing in that particular order flow. The only thing there that really helps is the fact that it came back and tested right up to the middle of this micro congestion area and then failed. So if we then zoomed right in and we looked at how much was actually transacted at this little high here, it's that one. This little high here, 44597 was transacted there. So you could say they could only transact 7 there. You had a stronger possibility of transacting down there. That could be used as your trigger. It's not a great trigger. You have got a resistance, a weak resistance wall nearby, but there really aren't any great triggers, and I'm really talking about not the world's greatest action here. That if you did use that rollover there of the last 7 buys at the top there, that is one of the benefits of having these volume dots as opposed to delta dots in Bookmap in the ETH zone. If we had a delta dot, let's do it and see what the difference was. So I'm saying that this little roll over here, the fact there was no great appetite to go any higher, and we tested back into the previous micro congestion range, what would that look like if we were looking at delta dots? It doesn't give you the significance that it has with the volume dots. Why do I say that? Because you've got even smaller little dots there. So you compare them again, total volume versus delta. The fact that you've got the smallest one at the extreme is what provides the help in terms of order flow here. And if you go back and you look at the previous one as well, that's a rollover as well. So if we zoom right into that one, we have to really zoom in because we have some interfering action from before. You've got a rollover of 6. I mean, we wouldn't ordinarily look at all these rollovers, but because the action is really dull and just choppy at this stage of the session, that's what we can do. We can look at all the little things that might be available to us on the microstructure inside Bookmap. So you can see them adding to this liquidity here. You can see a tiny little transaction too, and yeah, then they rolled that one over as well. Okay, so they are grinding their way down towards this 270 resting iceberg. I mean, the other thing that you could do is look at the market pulse price change oscillator. So if we swapped over the oscillator here, so this is this oscillator here, and we had a look at the market pulse one, and we switched that to the price change one, just to see what kind of extremes you get there. So, and we get rid of that. So I'm saying that we were testing back into this little micro congestion area. We were trying to get short. That helps in terms of an extreme of price over this time duration or this time span. So that helped a little bit more than the volume pressure imbalance in that scenario. So it's just, it's whatever is your cup of tea, floats your boat with that as your. I mean, you could say that the volume pressure is actually shown better by volume delta dots or the volume bars here, which are shaded according to the delta. So this is true volume, but it's colored or shaded according to the delta. What is NQ doing? So the action here is a little bit more interesting. Not because the liquidity is really helping us, but just because of one of the things that I like to mention, which is that in NQ, they do like to retest these large little volume nodes. So you see this volume here of 56 gets retested nicely there. But you have to look at that in the context of what is actually happening in the micro auction. What are they trying to do? Are they balancing? Are they congesting? Or are they moving, exploring in a certain direction? We know that the ES has a direction lower because it's got that buy iceberg that they might be able to transact at. But is that what they're doing here? Are we establishing an extreme of this congestion, this new congestion around this level here, which is about the 15277? And are all these large volume dots, which are mainly green, are they just showing buyer absorption as shown by the delta there as we push down? And we have that liquidity below, which again is not resting, but that may be something that they move towards. And then we move back at ES. And as I keep saying, I have these side by side on my large monitors, and I find it much more helpful to have it that way, where I can get information from order flow from one symbol and use it to help decipher what I'm seeing on the other symbol. That's just something that I think is a real advantage. So I'm saying that on this move down, if we'd have seen that the tests the NQ was making was just testing back to the large previous large volume dots and that they were being absorbed in terms of delta there, that would have given us confidence to stay in any trade that we'd managed to get into up here, with the ultimate target being this buy iceberg, which is slowly but surely getting there. Okay, I think we are down to we've got about 90 seconds left today. So any final questions that anybody would like to ask? I'll just check. Not got a great audience today, not a great in terms of numbers, but again, I hope there's something useful. I can't say that the action has been the best today. The better action was actually in Asia with that poor high. That was much better than anything else we've seen. And certainly this action in ES is just thin and choppy. It is moving, and I suppose there's a clear target that it was moving towards. But in terms of clearly identifiable, recognizable, repeatable action, it's not the best. When we zoom in and out of these columns, they do help, and you can see how the delta does give you a better view of what's really happening there. I'm wondering if they're going to tag that before 9 o'clock just so that we get that to close out the session. So, if we were on this micro analysis, we could see and watch this column to see how many the sellers were hitting and where they're getting through. So you have a little unfinished auction here, and they bounced. So they absorbed some sellers and they moved it a little bit higher. They're hitting the wall, they're hitting the wall. Keep getting through, but they're not really trading very much. They traded 8 contracts, almost there. When you've got these buy resting icebergs, one thing that I have noticed is that they may never actually get filled, but they may absorb a lot of sellers very nearby, and they can use that as a reversal. So far, if you look at this, there haven't been a tremendous number of sellers. Look at the sell delta, or look at the delta column here. So far, it's kind of a mixed bag, but that can often be a give or a tell that the iceberg wasn't going to be filled because they'd got their trap in, their fuel in to move it higher before it got down to the iceberg, and then they just moved it higher without having to go down. But here I don't see it as much. I don't see there's a huge number of sellers being trapped, so it would not surprise me, or I'd see it more likely that they do go down there. Anyway, I will probably wrap it up here. So thank you very much for coming. Hope there was something useful that I talked about today for you, and have a great weekend.